A startup goes through multiple phases in its journey. In the beginning, founders need to understand their market, the core value proposition, build a minimum viable product and partnerships, and take the product to market. Over time, as product market fit gets refined, companies need to focus on aligning their strategies, product, and people to their vision, particularly in fintech, where trust is a major factor. It takes a lot of finesse to navigate through the challenges in the early days to the later stages. Both Abhijit Bose, CEO Ezetap, and Gaurav Hinduja, co-founder and managing director of Capital Float, have successfully taken their startups from concept to this stage over a 5-year journey. In conversation with Sanjay Swamy, managing partner Prime Ventures, they will discuss some of the lesser-known details and insights into what goes on to ensure that a company makes it through from infancy to adulthood. Entrepreneurs at all stages should enjoy this discussion. If I could welcome Sanjay, Abhijit and Gaurav on stage, please. Yes.
Hi everyone, I don't know what we said, but everybody seems to have run away. But for those of you who stay, these are the guys doing all the hard work and the fun stuff. So, hopefully we'll have a good interactive session. And we'll keep it quite interactive. We can have a lot of questions from the audience because it's just two panelists here. It's fascinating to see when NPC started, and over the last 5 years now we have a track of our own for fintech. So I think everybody involved in this should feel very good. And I think it has gone from one person on a panel to being a full area that people want to discuss. There are a lot of money lenders in the previous panel, VCs like us who are very actively involved in this space. And Gaurav I've met from literally, I don't know if he remembers the meeting. When I told him I had no idea what he was trying to do, I couldn't even understand the scale of what he was trying to do. But here we are 4 years later, and a very healthy company in Capital Floats. And Bobby, of course, who I've worked with very closely, both initially as a competitor during our NGPay, MCheck days, and now together as partners on Ezetap. The industry has evolved quite a bit, and clearly the last panel showed that this is a serious opportunity. Credit Suisse has got a report that's out there saying Indian fintech over the next 10 years is a $600 billion in new market cap creation. Right? I think it's out there, and whether it is 600 billion or a trillion or 400 billion, it's all of those numbers are as many more than I currently have. So they're all very exciting, and we're all going to create some big opportunities, we believe. Clearly, India Stack, Aadhaar, all of that is also going to play a big role. So first of all, Gaurav and Bobby, welcome. I know you guys are more focused on building a company, so taking time off to come all the way to Yashwantpur is probably less for you, but you're close by. But I'll start with you, Gaurav, and maybe each of you can spend a couple of minutes just describing your business, and also kind of talk about what it looked like when you started out in terms of your vision and where you are today in that journey. So starting with you, Gaurav.
Sure, thanks Sanjay. So I run Capital Float. We are an online lending platform for small and medium businesses. We run a hybrid model, which means we have our own NBFC, but we also are a marketplace. So we've got institutions, banks, etc., who co-lend on our platform. It's been about 3 years since we started the company, and today we are originating almost 150 crores in loans per month to small and medium businesses, predominantly focused in new age ecosystems like lending to e-commerce merchants, drivers on Uber, travel agents on Via, Make My Trip, etc. The plan 3 years ago was always to build a lending platform. I think unlike most people in the country and unlike what the West, we said in India, a lending platform can only be built through an NBFC, and so we did a little bit of the hard work getting the NBFC license, and now are today on a hybrid lending platform.
I'm Abhijit or Bobby Bose. I'm the CEO and co-founder of Ezetap. So if you think about the typical transaction, you've got the consumer side and the merchant side, and there's many interesting companies that are arming consumers to go digital in this country. We support the other half. How do we enable merchants or businesses to accept all of these digital instruments that are exploding in the country? So we do that through many different ways. Any type of payment, whether it's cards, whether it's wallets, whether it's applications through UPI, we will support. And we allow actually merchants to upgrade from cash and paper to smart solutions. And I think that's one of the mega trends that's happening in India. So more and more businesses don't want just to be able to swipe a credit card. They actually want to deploy a software solution that'll improve their business, and payments has to be elegantly integrated into that, and that's what we do. We started the company in 2011. Now in USD terms, we just last quarter crossed $1 billion per annum in transaction value and growing quite healthily along with the market. And so that's us.
Thanks, guys. So one of the benefits of my being the moderator is I get to ask the questions. And I sent them all some questions, but I'm changing the question paper now. Yeah. So, the previous panel actually, triggered some of this, some of the VCs in the room were pretty dismissive about the opportunity to build long-standing companies here, right? Many felt that this is just an experiment, banks are going to partner with you, and at some point if one of you, achieves some sort of set of some traction that they have not been able to in the past, they'll just write a check and buy you guys out. Would you consider that a successful outcome, ignoring the financial benefit, right? Is that what you all are playing for, or are you looking to build lasting companies here? Okay, I'm also on this board, by the way. But
So, I mean, at the end of the day, it comes down to the aspiration, right? I mean, yes, there's nothing wrong in building a $100, $200 million company, selling it to a bank or an NBFC. It's got a good financial outcome. You did good, you returned good money to the investors. But very frankly, Shashank, my co-founder and I, we are not in this for the short game, right? We're here to build a lasting organization, take the next 10 years, 15 years, 20 years if need be, and build an organization that actually capture a large part of that 600 billion market cap that everyone's expecting over the next 10 years. I think we're already on our way there. Obviously, it's still a long way to go. But what we've proved over the last 3 years is you can start to build scale, you can start to be innovative, and you can start to really outcompete the incumbents in the space. And by doing that, the next 3 to 4 years will be extremely critical for us to really help realize that vision.
Yeah, I would say to get into an entrepreneurial journey, you have to be absolutely insane. There's no actual financial model that makes sense to do this. And you do have certain types of people who build companies to sell them. I think you wouldn't come to India at the time that we were here with low aspirations, and just like Gaurav said, we recruit people and say, do you want to transform the world? Because otherwise you really shouldn't be here. And that's what we want to do. And I think actually, if you think about it, I came from the Bay Area. When I came here in 2005, the idea was that these are once-in-a-generation pockets that happen in literally 100 years. And the Bay Area probably had that in the 80s and 90s, and we're unbelievably fortunate to be here now. And so there's actually windows and times where you should be building practical companies, but there's windows and times if you can sense the opportunity to do it. To make a comment on the last panel, humbly, I think incumbents that think that they're going to win is absolutely naive. I don't agree with that at all. I think if you look at the telecom world, for example, operators have phenomenal businesses, but at the end of the day, software companies like Apple and Android actually control the ecosystem. And so I think you have to come in with a certain set of practicality and a certain sort of aspiration. I think there's a place where software companies will have a very dominant role in this, and that's not dismissing the incumbents. I think in India in particular, you have to be very practical about how you partner with them. So it's not about replacing them, but it's finding your place in the ecosystem. And I actually don't believe that this is the incumbent's place to play. I think there's a great chance for new companies that are done well to change the landscape and actually own a large share of the enterprise value.
And both of you have built your businesses. I know you have an NBFC license, but you also partner with other, certainly banks and maybe NBFCs. And Ezetap, of course, is completely built in partnership with banks. So there are two ways of looking at this, right? One is I'm doing what the banks were doing. I'm just doing it better, faster, and cheaper, and in a more scalable manner. Or I'm actually the game is shifting to another area where, and this is very complementary to what the banks are capable of doing, and there will always be an exception bank that is, fast moving, etc. But broadly, that's not how they've been built, and that isn't in their DNA. So what do you think? Is it more where you're really the next generation bank and you're faster, better, cheaper, and or are you actually expanding the pie by doing something layered on top of what across all the banks seems to be commoditized?
No, I think there's only so much you can do if if your value proposition is just trying to be faster and cheaper, right? That may be one of the value propositions, but ultimately what we are trying to do is actually expand the pie, so to speak, right? And that's by going after new segments that banks typically don't lend to. Whether that's an e-commerce merchant, nobody realized that opportunity existed till 3 years ago when we started lending. And why the banks will continue to do this is, as we all know, they're all moving away, or rather want to move away from corporate lending and get into more retail lending, because obviously for issues of NPAs and defaults. Right, so they all need what we call priority sector assets by regulation. They all want new age ecosystem assets where you can get new age data, and a lot of banks are slow in understanding what that really means. And thirdly, they want to do it in an OPEX light model that the existing branch infrastructure does not allow them to do. So it is definitely complementary to a large extent, and like you rightly said, there will be one bank, one NBFC who tries to compete in all spheres, but by and large, it's going to be a fairly collaborative play.
Yeah, no, I absolutely agree. I think beyond just finding untapped markets, what's happening now again is a place where the actual core IP of technology is a needle mover. It's a very distinctive advantage that software companies have. So the way you can analyze whether that'll get competitive or not, I think that's something different than what the banks have. I think the ability to integrate into software and expand and scale and create a completely different ecosystem and experience is something that software companies can do that banks actually don't have in the DNA. At the same time, it layers in as a total complement to the entire system. So one of the things we never did was say we will actually want to own the money or hold the money of the consumer. That's what a bank does exceptionally well. And so it is very complementary, but also it's about market expansion and also coming up with unique technology that is very, very different and actually is driving the USP in the sector.
Got it.
So let's switch gears now to the original topic of this, which was the nuts and bolts of building this company, right? From the time where you had an idea or we were brainstorming about this in the very early days to getting to where you are today, right? And I'm sure there's been a lot of probably more downs than ups, right? In the grand scheme of things, but some seminal moments probably that were defining for your businesses. Can you trace your journey a little bit? And if you look at the phase of getting the concept to getting the product market fit established to convincing investors, convincing other people to join the company, which I think is the biggest investment in a startup. Especially people talked about trust, and Alok was saying that it takes 10 years to establish a brand of trust. But clearly, you guys have established that much faster. So talk us through that journey a little bit, and maybe you can both sort of interrupt each other and talk about it as well.
Sure. So I think our journey was a little fun when we started about 3 years ago. We came back, my partner and I, from the US. We were studying at Stanford. At that point, we went around, met Sanjay, met a few other VCs, and we said, hey, we want to do unsecured lending online in India. And they told us, you guys are nuts. Just go back to Silicon Valley and start a SaaS company. I'm like, that's not what we want to do, but we take your advice and thank you very much for it. But everyone thought that we were really crazy, like you two guys who have no experience in lending. My partner comes from McKinsey, I come from an apparel manufacturing background. So you guys don't have any experience in lending, what are you trying to do? And our vision always was, if you can buy a smartphone on a Flipkart in like under 2 days, why is it hard to get a 2 lakh loan online, right? Spent the next 6 months to a year figuring out whether this was the really right model, and actually started to doubt ourselves also, other investors actually saying what we should have listened to them. But then finally we said, hey, let's take the plunge. We gave out our first 10 lakh loan from a few family and friends. We collected that money, gave our first 10 lakh loan. It got repaid in 3 months, and then, albeit that's how the real business started. I think the real milestone in some sense was once we actually went out to the first investor who said, hey, this could be a model that could work. The timing happened to be good because at that point Fintech in the US also was starting to be a talked about industry.
How much time did that take to get
It took us about a year. Took us about a year, and then we got our NBFC license, and that's when the business really started to take off. And
yeah, maybe Bobby, you can talk about a similar phase of your business, and then we'll get to the sort of.
Yeah, I mean, so my journey's a little longer. What brought me to India from the Bay Area was exactly what I said, just watching Tom Friedman in 2004 talk about the world being flat and said, oh, this should be easy, let's go do it. And of course, 11 years later, it's still not easy. But it was, it's easy to tap. So, but it was a firm, literally irrational belief that I wanted to be an entrepreneur, and I felt like, look, if this window in time is unique. And so I came here, and Ezetap is the outcome of pure stubbornness, quite frankly. So I came here, got my feet firmly planted in India, and then joined a startup called NGPay, which was at the very bleeding edge of mobile commerce and mobile payments. And as Sanjay mentioned, he at the same time had come from the Bay Area and was running MCheck. And there were a lot of lessons there. But ultimately, in hindsight, there was a lot of environmental systemic things that were going against us. I think timing is very, very important. And understanding when the timing is right, when the environmental factors are right, and when they're not is very important. But at the end of the day, the core fundamental fact is that this country, at 99% non-digital, in just the understood economy, makes no sense. And at a macro picture, this is something that had to happen. So fast forward to 2011 when Sanjay came back to us and said, let's do this again. And let's do it with whatever learnings we have. It was very, very appealing. Because I think once you go into the entrepreneurial side, it's very, very difficult to go back. And so I had that bug, and it was stubbornness and patience and learning and kind of absorbing, and that's been the journey. And it's been something I would never trade. As painful as it has been at times, it's been phenomenal, and I think learned quite a bit.
Show of hands, how many people in the audience are or have been entrepreneurs? Wonderful.
There are certain days I might trade it.
I always say it's 360 days of frustration and 5 days of glory, but those 5 days of glory in a year, which you don't, you can't predict which are those 5 days. Those are worth living for, right? And I think that's the thing. So, the first phase is really just sort of getting, the house in order a little bit. And at least my experience has been that startups need to try out a lot of things during that phase. And actually, strange as it might sound, over a period of time, you start doing fewer things, but you just start going deeper and deeper, right? So share some of those things, things that you thought were going to be obvious winners and ended up being absolutely ridiculous ideas, and things that surprised you along the journey.
Yeah, so I mean, when we came back in 2012, at that point, e-commerce was still really gaining a little bit momentum. Obviously, Flipkart, Amazon, Snapdeal were not as big as they are today. And so we said, hey, e-commerce financing may not be the most exciting opportunity. These guys are burning cash. Who's going to fund their next round? They themselves will collapse, so are we going to die along with them? So we said, let's just focus on more traditional segments, and let's keep a few pilots going in the e-commerce side. And albeit we did the first pilot with Snapdeal, things went very well, and that's really how the business started in many ways. But I think what has really surprised us is the technology sort of inflection point in India, right? When we came back, India was like, it still is in some ways, obviously data poor, but the level of data richness that exists in certain segments, if you're an SME through the ROC, and now in the last 2 years through India Stack, through Aadhaar, through eKYC, etc., I think that has really helped us build the plumbing to what can be a very large business leveraging a lot of this infrastructure. And that was a pleasant surprise to us.
Yeah, I think we kind of came in with a certain hypothesis, and I think one of the things we've done reasonably well was we were learning and investing quickly to kind of run experiments. And there's probably been 10 or 15 things that we've started, scaled, and then killed, and scaled within reason. So I think that was really important for us, because at the end of the day, one of the things, and everybody will say this, I think we've all understood it in India now, is India is wonderful simply because you need a balance of kind of this Bay Area software and craziness to create the innovation in some ways, and also the practical skills and experience, both kind of on the ground and data, to help you refine the model and understand what works and doesn't work. And both are absolutely critical. So the narrowing down of what we did and the bets that we make now and the decisions that I make now are based on 5 years of 60% failure of experiments, 40% successes, refining and tuning. And that takes a long, long time. So I do agree with the panel before that you actually need to put them hours and effort and sweat in to understand this market. And there's no way anybody who's starting now, not that we're smarter, we've just gone through the bruises and seen what works and doesn't work, and I can tell you how different sectors will look now with data. And that was really important, and that's led us to be much smarter in terms of our bets and our hypothesis now what the market is.
Yeah, somebody in the area once told me, I think it was Naveen Chadda from Mayfield, that you need a combination of the Haryana hustle and the Bangalore brain to do anything here in India. And I think that's I think, when I look at a founding team, that happens to be one of the, the check boxes, at least internally. Do they have the combination of the two? Switching gears a little bit, there was this topic of trust, right? And both of you have built, are building still, financial services companies. And Alok's point of, trust cannot be built quickly, what strategies, since I'm sure there are a lot of fintech entrepreneurs here, and that's probably the fundamental question everybody's got in this, right? How do we establish trust? What worked, what didn't work?
So I think this is a choice we made in terms of our business model, right? At the time when we starting the business, and even a year after, all investors, every wise person told us that, hey, you either have to be a marketplace or you have to be an NBFC. And we fundamentally disagreed with that view, because as a marketplace, I cannot go to anyone with a straight face, be it a bank or an HNI, and say, lend your money to somebody who I'm saying is credit worthy, right? I would not give a single rupee to that platform. And so the way we went about building trust is, which is the dirty way in some sense, is actually went about, got the NBFC. We said we'll build our own track record in lending, because none of us knew how to do lending. We spent a good 1.5 to 2 years understanding lending. What does a DSCR ratio look like? What does KYC look like? Where do the hell he needs to sign on a loan agreement, right? We did all that dirty work. And then we go to the market and say, hey, I've done 2 years of lending. I've done 200 crores. My track record in terms of NPAs is good. Now come on and co-lend with me. And that's really helped us gain a lot of traction on our marketplace, both from institutions as well as from family offices and HNIs. The second thing we've done is sort of don't hesitate to build an online-offline model, right? Online is cool, it's sexy, it's scalable. But in financial services, building that offline model when it comes to collections teams, when it comes to some amount of FOS, that adds a lot of strength to your model and gives a lot of people confidence.
So I think the way we approach it, trust comes from two things. Consistently successful customer experiences, number one, and number two, a track record of trust. And when you start as a company, you don't have the latter, right? So we focused absolutely on making sure that our product experiences were great. I mean, our first customer was Flipkart. And the first time I met those guys, if you guys remember, they were running around with pieces of paper. So it wasn't just about how do we take cash out of the hands of these agents. How do we actually, this is insane, you can't be running your business with paper. So that all kind of converged, but at the end of the day, we had guys on the back of two-wheelers at those deliveries making sure things worked. We had printed backup receipts. Nobody knew whether somebody would be okay not getting a paper receipt. So we literally had books printed, guy on the back of the two-wheeler ready to write a receipt. And guess what? We never actually wrote a single receipt, but you had no idea. So we were very focused on making sure that those first experiences were exceptional, not just for the consumers, but ultimately your customers as well. Secondly, I mean, if you look at the concept of digital payments, even now, but back then, 2011, it was nascent. So you couldn't expect somebody to go to their local shop and trust that guy with a little device and some magic happening in the background. So we made a conscious choice, which went against every other market in the world. In every other market, this mobile payments was targeted around SMEs. Put an app on an app store, put it out there, and then, of course, people can start transacting digitally. Of course, these were all in Europe and the US, where there was a different level of trust and the market was more mature. We went to enterprise. So if we don't have trust, who has trust? Well-branded companies who we can convince from a business point of view to use us. And we were piggybacking on their trust initially. And similarly, to our earlier conversation, banks have trust. So when you want to go to retail, we also did something that wasn't done in every other market. In every other market, companies had cut out the banks. And we said, no, we need their distribution, we need their trust, we need a lot of these things. And that's how retailers trusted us, because they trusted their bank.
Great. So we have about 9 minutes left. I'd like to turn it over to some audience questions. I do have a couple more, but I'd like to, yes, please. I can hear you. Okay, so I have a question for Gaurav, actually. So I think you said that. Can you just introduce yourself and name and company?
Some transactions you mentioned, you gave a loan of particular lakhs amounts, and did you have some transactions to arrive at a product market fit or something?
Yeah,
like that?
so I mean, the reason it took us a year to get an NBFC license, because it took us 6 months just to find the right license, right? We would have hopefully got it earlier. But to your point, we were doing a few transactions earlier, because as a company, you're allowed to do intercorporate deposits, right? So we were making a few loans as under private limited company is allowed to do, right? So it wasn't much. We probably were doing like 3 transactions a month totally for the first like 6 to 8 months.
What were your learnings there? Because it's very critical for
yeah, I think the learning is that we didn't have much tech at that point, right? Our application form was built on FormStack. But the learning there was, even on FormStack, that a borrower was so impressed that he could fill a loan application form online. I think that wowed him, right? Because when we saw the, and I don't take the names of the banks, but we saw a few bank application forms. They're like 8 pages long and asking you details of machinery, details for an unsecured working capital loan. It was highly confusing. So the process, the experience that you can give the customer at the end of the day, and finally, what sort of product can you give? So we started with an invoice financing product, which was not really available to most SMEs, right? You could go out there and get a term loan, you could pledge your property and get a sort of 10-year loan, but you could not get a loan for 60 days against a receivable of a blue chip company. So your feedback, the customer's feedback on the product and the process was some of the early learnings for us.
Any other questions?
I myself am running a fintech company, so just want to know when you guys started to where you are today, how has funding played a role here? You know, and so to me, you know, it's still at a very early stage for both of you guys. For Gaurav, for you specifically, as you look at cost of funds, you are a lending platform. Do banks treat you equivalent to any other NBFC today? I mean, do you see that? And then again, does funding play a role here?
They treat him better, by the way.
Yeah, I'm sure.
Some
So,
of them do.
you know, that'll be interesting to hear from you guys.
Sure. So I mean, in the early days, we gave loans out of equity, right? There was no other way for us to give money. Nobody is going to give us a loan because we're solving the problem of giving loans, right? So we lent money against our early seed round that we closed, I think was the middle of 2013, which was about 6 to 8 months after starting the business. So all the loans came from equity. The next stage was sort of obviously starting to get a little amount of leverage into our business, right? And that was from banks, that was from NBFCs. I think we were able to pitch a good story there of our team, of the sector, of the segment we are going after. We had a decent amount of equity base, so we did get debt at a lower cost of capital than a typical NBFC, early stage NBFC would do. And today where we are is obviously we've got a combination of equity and debt, but about half of sort of what we do comes from a marketplace, which is banks and NBFCs lending, co-lending with us on our platform. And the economics there work very well for the borrower, because finally the cost of capital is not my cost of capital as a new age sort of NBFC lender, but it's what the bank or the large NBFC can do, which is far lower than what I can give him.
Yeah, so we were incubated, and I think that was one very important decision that, or factor that we had, which many people don't have. So we started off with $500,000 in the bank, and I think that allowed us to accelerate much faster than a lot of startups who have to really bootstrap early on. So I think that was one piece of advice I give to people. If you can get that, it's worth it. And we took in a series 3 rounds, all small scale. One of the nice things about being on the business side of things and essentially an enterprise software play is it's much more capital efficient, obviously, in terms of your model. So we haven't needed to raise hundreds of millions of dollars. We've raised 30, and each time we've stepped up, and it's the capital has been tied to kind of expansion and growth directly. So the last round was 23 million, and I think our business at that point is self-funded at that point.
Any other questions? Cool, I'll ask the last question. We're just about 4 or 5 minutes to go. So looking back, what does the Bobby or Gaurav of today tell the Bobby or Gaurav of 4 years ago? Well, tell yourself, I meant.
I think we all heard
The reason is, you know, if somebody's
Sure.
starting out here,
Sure.
right, what are some of the lessons that they can take?
Yeah, I think one, I wouldn't call it a regret, but one of the lessons that we probably could have, or something that we could have done better is, for the first year, a year and a half, we were quite conservative, right? Is lending, we don't know how to lend, we didn't know how to assess a borrower, right? So I think in the first year, we gave only like maybe 5 or 10 crores worth of loans. The second year was 100, and the last 3 months have been 400 crores. And what has happened in that time is, I think we did obviously give way to a little competition to come into interesting sectors of e-commerce and taxi, which we realized were opportunities before anybody else. But just given that we were conservative for the first year, I think we let the door open for some competitors come and be it new startups or be it big banks. So I think if I were to go back, and I would say maybe the first year I would have taken a little bolder bet.
But isn't there a, I mean, it's hindsight, right? And you probably got a few things right that you might have got wrong in those situations. So from an entrepreneur's perspective, right, are you saying do more experiments first, and there
Yeah,
might be juicier
I would say do
segments?
more experiments, but also don't be afraid to double down on the ones that you start to see a little success from, right? We were always worried that, okay, we've done 10 loans in e-commerce this month. What if e-commerce is not good? Diwali is 3 months away. What if e-commerce is not good? Is our business going to tank? And I think taking some of those macroeconomic bets is something that an entrepreneur has to learn how to do. And we learned it over time. And to the point is that maybe the first, like you said, it's hindsight. Maybe things could have gone drastically wrong, but that's something that we probably would have done slightly differently.
Yeah, I think we're also very lucky to be in fintech, because I think fintech itself has evolved very quickly and has become, a lot of things have exploded in the last couple of years. So a point of view that you had in 2011 didn't apply in 2014 and 2015, and that's actually very important. The one thing I would say is just don't get stressed. I mean, there's times in the first couple of years in particular where you were chasing
He says
something.
that to his partners also.
Yeah, exactly. I should have. Because we were chasing a interesting set of numbers that weren't relevant in any way or unable to be accomplished in any way. And I think that, of course, feeds a negative cycle in any entrepreneur. And if you can get over that and say, look, this is whatever we are today, as confident as we are, whatever clarity we have, is built on 5 years of successes and failures, as I said before. And to understand that that's the latency that you need. That's the runway that you need, which, by the way, is not the way the Bay Area works. You're in or out in 2 years. And also, a caution for people who have U.S. investors, as wonderful as they are. I have one of the best U.S. investors, I believe, who's been backing us. We also had trouble calibrating, because I think there was a mental map of how the U.S. companies should scale and look that didn't apply to Indian companies. And I think if all of us now would look back, I think, and say, hey, listen, there was a different cycle for how an Indian company, especially in this space, needs to work. And let's kind of really think through this methodically.
I think just to add to that, Sanjay, is so Bobby had the option of being incubated. We didn't, right? And I think one thing that's really helped us is having a co-founder who is very complementary in the way he thinks, very complementary in skill set. So Shashank, who's my co-founder, is the brain of the business. I'm more of the brawn of the business. But it's funny that when you go through these days of stress and you go through those 360 days where you're feeling down, it's funny how the other person cycles always opposite. And that balance is something that's really helped tide us through over the last... Sorry?
It's called marriage.
Fair enough. So that marriage actually has helped us get to where we are today.
No, I think it's fascinating. I mean, I've seen both the companies and, obviously been much closer to the details at Ezetap, but seeing you guys also from the beginning. I think, we were looking around when we were trying to do this panel and said, can we get a bunch of companies that have been around for several years in the whole financial services space, and we said, let's really bring two and, that we can have a more sort of detailed conversation with, and there aren't that many, by the way. Probably a few more in the payment space, but certainly on the lending side, very, very few. This is a tough space, and you have to be willing to grind it out. And it is really, really tough. I mean, there is no question about it. Getting people to part with money, which is hard earned, is extremely difficult. But I think there is. Oh, I suddenly got another 6 minutes. Awesome. I think the one thing you'll find about fintech, which you didn't get to talk about, is the prize is definitely worth winning, right? The second thing is actually the one quick question I have for you. Yes or no? Winner takes all. Does it apply in this domain?
No.
No.
Okay. Are you sure about that?
I think, no, but to be fair, I think it'll look like software. Number one gets 70%, number two gets 20%. Some other people will fight over the last bit.
So the prize is definitely worth winning, and because it's a tough problem to solve, not many people are going to make it through. I remember during the early days of Ezetap, and Visa used to tell me, there are like 24 companies, why should we work closely with you guys, right? And today there are probably 3. And and also the segmentation of the market has also started to get defined a lot better, right? So I wouldn't say necessarily that the other 2 players are direct competitors. So the opportunity is big. The other big thing is India's stack is going to lead to explosive growth, and we talked about the Credit Suisse prediction. So I think the opportunity is great, and really thank you both, Gaurav and Bobby, for making the time to speak to people here. And if you're sitting on the sideline saying, should I become an entrepreneur, please don't jump into the ring.
Thanks.
Thank you.
Thanks, guys.
Thank you, Sanjay, Abhijit, and Gaurav for that no-holds-barred conversation. I think it was quite delightful. Sanjay, if you could just... Thank you, guys. So for the